Good morning, everybody. Welcome to the Morning Kappa at 8 on the Wednesday. We are here to present to you the Midweek Futures Traders Technical Brief, and this is week 2, January 2026. This table is the products most traded by our traders. And from the previous week, we can see that there has been a lot of sea of positive setups, and true to form, markets have performed accordingly. And namely, those are in the US indices as well as the metals. And also where we saw agriculture from neutral positions went into a tailspin for a negative setup for this week. For our own local products, FKLI also performed accordingly and remain to be positive in its trend and also the setup. And palm oil remains to be neutral, but we will take a look at that. And here it is for palm oil, mainly due to the fact that the news flow has been not positive. Indonesian government has decided not to implement the 50% biodiesel blend, and the policy remains to be at B40, but studies and preparations for B50 will continue. On the local front, palm oil inventories climbed beyond the forecast of last month, exceeding 3 million tons for the first time since 2018. But we saw imports surge. However, later on, we saw export figures for January first 10 days increased between 17.7% and 29.2% as compared to the previous corresponding period. So there's a mixture of news here, and also palm oil has to take the lead from some of the performances in oil and grains, and mainly from soybean oil, which has been climbing and also looks like have turned from the bearish stance that it has taken for the couple of months. This is a run through of the US indices for commitment of traders. We only see there is been a movement in the S&P 500, whereby the number of shorts have been reduced. And on the NASDAQ, there's an increase of 9,000 lots of short positions being increased. Basically, market are a bit concerned on the Trump administration criminal investigation on Federal Reserve Chair Jerome Powell. And there are many defenders of the US Central Bank which have come back and has pushed back against President Donald Trump's efforts to exert more control over the Fed. Actually, if this happens, then the independence of the Fed would be compromised, and this is the reason why the former Federal Reserve chairpersons have come up to defend Jerome Powell. So this is a concern that's ongoing in the US side of things. The first product that we are looking at for today will be the energy sector. And of course, this is the crude palm oil. This is the crude petroleum oil, crude oil. And we have seen the crude oil WTI, there's a reduction of short positions, but prices have continued to perform better, on the geopolitical tensions that we have seen recently. In fact, President Donald Trump has mentioned that the US will place a 25% tariff on any country that does business with Iran. This move comes as the Trump administration weighs on how to respond to protests against the Iranian government. The prospect of disruption to Iranian energy output presents a bigger threat to global supplies than what we have seen in the Venezuela situation. So, like mentioned, the crude oil prices have seen some kind of a recovery, and therefore the product of the week that we are proposing here is micro crude oil and the MCL February 2026. Both the existing profile and also the short-term setup is positive. Current price at 61.10. Reference price, we're looking at 60.30, and a potential profit price of 62.2, giving us a value of USD 190. And assuming things don't go well, and the 58.20 is the potential loss price we're looking at, giving us a value of loss of 210 US dollar. The next one is oil and grains, like mentioned, especially for soybean oil. Despite of the fact that there has been an increase of short positions in the commercial side of things, prices have improved quite tremendously. But whether this is going to be a full-blown turnaround is left to be seen. But for sure, for trading opportunity, we are looking at a very good potential here, as the sideway market has already turned into some kind of a moderate uptrend, and also useful, even though negative, the market has taken it in a strike. And so for the second product, we are proposing to be looking at the soybean oil. Both existing profile and also short-term setup is positive, and current price at 51.10. Before the reference price can be hit, we are looking at a possible strong dip back to 49.90, and after which we are looking at a positive move back up to 51.50, giving us a value of 960 in potential profit. And again, the stop loss level, if it goes below the 48.90, giving us a potential loss of USD 600. So that's all I have for this morning. I'll pass on to the next speaker. Thank you.
All right. Morning, everyone. Thank you, Vincent, on the week futures update. Right. So for the past couple of days, we can see that the Hang Seng Index continue to move upwards, and right now, we can see that the 20 days moving average have crossed above the 50 days moving average. So going forward, right, we can our first resistance will be 27,400 point, and followed by a higher resistance at 28,000 point level. So looking at the last yesterday 1 day Hang Seng index performance, I can see that the Alibaba went up by 3.6% yesterday. So among the big components in the Hang Seng Index, these are the 9988 Alibaba, Tencent 700, Xiaomi 1810, as well as the SMIC 981. Most of them are doing the consolidations, but the Alibaba have bucked the trend that staged breakout yesterday, right? Should the momentum follow through, right, that will lift the sentiment in the Hong Kong market, and you can expect the Hang Seng Index to break past the 27,400 point in coming days, right? So as such, I think that first we'll be looking at Alibaba Group 9988 this morning, right after they break past the 155 Hong Kong dollar. Next R1 170, R2 190, then on downside support at 140. Right. Secondly, we have the healthcare stocks, which is the WuXi Biologics 2269, also break past the 38 Hong Kong dollar. So you can see that the volume has been rising in tandem with the share price, showing that the momentum is strong right now. So follow through price actions will test at 42 and followed by 46. Downside support is at 36 Hong Kong dollar. So we have WuXi 2269 and followed by Alibaba 9988. So yesterday, you can see that the S&P 500 have a mild consolidations when it's start approaching the 7,000 point level. But looking at the overall technical setup, you can see that the S&P, right, continue to move on a higher high and higher low, right, and continue to trade above the 20 and few days moving average. You look at the ATR, right? The weekly resistance also starts to actually moving upwards. Shows that the volatility is increasing, bullish momentum in play, right? Despite that, last Friday, last weekend, Trump suggests that the credit card um, player to limit their interest rate at 10% a year, right? Apart from that, I think sentiment remains strong in the US market, right? Looking at the S&P one-day performance, you can see the Visa as well as the Master, right? Both are experiencing a different degree of corrections yesterday. But while funds are actually moving out from this sector, right? They're actually looking for shelter, right, in the AMD, right, Intel, right, these two have went up, but generally, right, overall market remains constructive right now. Okay. So in the US, I think I want to bring attentions to one sector that you may not following, which is one of the leisure stocks, Airbnb, right? Look at their fundamental. The company has been generating a very healthy cash flow based on their past 9 months results. They have actually delivered better than the previous year, 2024 9-month results. So if this coming quarter 4 results, they continue to deliver, continue to stay on a strong momentum, right? The full year FY25 may surpass the FY24, right? Not only the revenue beat the expectations, more importantly, is that on the cash flow, right? I can see that Airbnb, right, a tech player, start to deliver a cash flow when the EBITDA reach positive. So if their operation cash flow become positive, and their free cash flow become positive, right, I think this stock is worth to take a look, right? So that is something apart from technical that I want to bring my attention is that fundamentally there is a massive change on this counter, Airbnb, which uh, if you are following our foreign stocks for the past few months, one of the counter I've been mentioned to you relentlessly is actually Airbnb. So the other counter I think would garner market attentions would be the oil and gas related counter since the world is actually paying attention to the development on Venezuela, right? You can see SLB, right, was previously named Schlumberger, right? The company actually is specialized in selling oil and gas equipment, right? So the share price have break past 45 US dollar. As of yesterday, the momentum remains intact. And so I think we can actually pay attention to the oil and gas sectors apart from the semicon sector. Right, and as for the local market, FKLI momentum remains strong on the upside, heading towards 1730 after we managed to break past the psychological resistance of 1007, right? And the higher resistance will be 1750. Downside, we mark at our stop loss at 1650. Okay. As for the FCPO, yesterday was a very volatile sessions. In the morning, it went above 4,001 towards the closing due to the negative news. It have give up the intraday gains and close below the 4,001. So based on the price actions, 4,001 has become a very strong resistance for the FCPO, right? As we understand now, the B50 schedule may get delayed, right? So what the market will be looking at is whether the oil price and also the movement of soybean oil, whether both of these will actually give some support on the FCPO. So overall, we keep a bearish trading bias with our stop loss at 4180. Right, and now yesterday Malaysia market was a bit I would say quiet, right? But even so, you look at the heat map, there are two stock have stand out. Firstly, the THMY that went up by 8% yesterday. Secondly, would be Spritzer that went up by 7%. So both counter have bucked the market and delivered a superb performance yesterday. And you look at THMY and Spritzer, these are the two stocks that Aiman have actually posted in his trading stocks previously. So for Spritzer, it just hit the R1 at 3 ringgit. R2 will be at 3 ringgit and 20. So yesterday, the Spritzer has printed a long bullish candlestick on the back of high volume. Momentum remains strong at this juncture. Meanwhile, THMY, a newly listed counter in Busan, Malaysia, they have actually break past the 1 ringgit and 5 cents. So over here, I just want to remind some of you is that once the shares climb above 1 ringgit, every bit movement is 1 cent, which is 1%. Right? If you are the trader who are looking for percentage returns, THMY right now has become one very interesting counter. So on the R1 is actually at 1.15, followed by R2 at 1 ringgit and 25 cents. Okay. Thirdly, right, last few days I get a lot of questions on the hibiscus, showing that the interests have actually built up on this oil and gas, this petroleum producer company. So hibiscus, look at the fundamental. Aiman also published a technical report, I think on the Monday, right? The shares have break past 1.55 cents, and yesterday, right, I managed to close with a positive candlestick. Next level will be 1.65 and followed by 1.70, right? And downside is at 1.50. So if you're interested on the fundamental prospect of hibiscus, you can look at their briefing slides on their website. Otherwise, you can also play back their interview with RHB somewhere last year at our Facebook. Okay. So we have 3 counters that this morning I want to seek attentions. Then on the trading stocks. Firstly, we have PNB Technology, which break past the 1.40 ringgit, right? Our volume has been strong. One will be 1.55 ringgit and followed by 1.70 ringgit. Now support is 1.30 ringgit. EcoShop Marketing, now fundamental research analyst Wei Xiang have re-rate the counters, and in terms of technical, right, EcoShop have break past at 1.55 ringgit. The next R1 will be 1.65 ringgit and followed by R2 1.75 ringgit. Downside support is at 1.45 ringgit. So we have 2 breakout stock. Firstly, BNB Tech and followed by EcoShop Marketing. So I'll stop here and pass the stage to next speaker, Hilmi.
Hello, everyone. Sorry, thank you, Joseph. Good morning, everyone. Today I'll be presenting sector update on plantations on behalf of Lilang. So yesterday, the Coordinating Minister of Economic Affairs of Indonesia has announced that Indonesia may not implement the B50 mandate in 2026. So the Coordinating Minister, named Hilangga Hartarto, recently indicated that the President Prabowo has directed the biofuel mandate to remain at B40 for the time being. So due to the announcement, we placing out 2026 CPO price assumption of 4,250 ringgit per ton under review. So since the B50 implementation is delayed, Indonesia will maintain with its current policy now at B50. Hence, however, the studies on the engine compatibility will still continue while the government will actively monitor at the POGO spread and the overall funding requirements. So this is not a cancellations. The government will still continue to prepare for the B50 mandate for the second half of the year, with subject to the market conditions and the readiness. So on the levy, Airlangga Hartarto confirmed that the new levy rates could be announced in the coming days. To fully support the B50 biofuel mandate, Indonesia would likely to need to raise its palm oil export levy. So according to our calculations, based on the current POGO spread of around $382 per ton, we estimate that the levy on the refined products will need to increase to at least 13.3% from the current level of 7.5% in order to fund the B50 biofuel mandate for the full year. So this development increases the downside risk to CPO prices because our current estimates assume that the 2 million tons of the additional CPO demand from B50 is in the second half of the 2026. So any delay or any partial implementations will require us to revisit our supply and demand assumptions. So this cautious outlook is also reflected in the biodiesel quotas, with the 2026 allocations is set at 15.646 million kiloliters, only marginally higher than the 2025 and nearly half requiring subsidies from the plantation funds. So in summary, while Indonesia remains committed to higher biodiesel blends over the long term, near-term execution risks have risen. So we therefore maintain a neutral stance on the sector and place our 4,250 ringgit per ton CPO price assumption for 2026 under review. We maintain to like Johor Plantation Group, Sarawak Oil Palms, IOI Corps, London Sumatra, SD Getty, and First Resources. That's all for me. Pass to the next speaker.
Okay, morning. We have a sector 2026 strategy for telecoms. It's a neutral call. We still like the fixed players relatively. Top picks are TM with target price of 830, Axiata Group at 295. So basically, just a couple of pointers to note. The telcos, especially the three MNOs, mobile network operators that have basically been expressing their interest in terms of DNB. They will have to complete the MOF put option by 1st of February. This is the indicative timeline, but I do understand that there's a need to actually, there could potentially be a need to actually extend that deadline to beyond February 1st. So basically, the put option allows them to take over MOF stake, 41.7% here. And basically, they would have to acquire related shareholder loans as well with interest built in and advances for about 328 million. So if you look at the previous, capital injections and all that, the total investments in DNB by the three MNOs would amount to about 678 million. So it's something that obviously they can bear, not a concern in terms of the balance sheet. The concern really is the losses at DNB for FY24, which is the latest historical number that you can find from the CCM website. It's 1.2 billion there. So basically, it's imperative for the telcos to further optimize costs at DNB. Network cost is a significant component of OPEX, so they will be looking at ways to basically, relook at how some of the network agreements are structured. The other part of it is really DNB's debts. It's over 4 billion, something that have accumulated in recent years. Which the telcos would have to basically look to in terms of trying to alleviate some of the pressure in terms of the financing charges there. So not something that's really quite interesting in terms of the DNB 5G overhang. This is something that will continue to cloud the interest on the sector. Competition-wise, I think if you look at fiber broadband penetration is well above 60% now. It's grown quite rapidly over the last 18 to 24 months. Thanks to competition within the MNO space as well as TM reacting to competition as well. So you've seen that big lift in terms of broadband penetration, and that's really benefiting the country as a whole. So it's really a consumer market there. So we think that fiber competition will probably slow a little bit given the higher household penetration. On the mobile side, I think competition remains fairly tight. Prepaid is coming back up in the market, the add-ons and all. So it's a space that it's worth watching. As you know, the prepaid market has been under a lot of pressure in recent years. There's been outflow of migrants. The whole market is shrinking. And the conversion of pre to post as well has also impacted the prepaid segment as a whole. So, more than 60% of the market is basically made up of postpaid today versus, less than 50%, 5 years ago. I also want to point out the focus in terms of wholesale and enterprise business. This is something of a new, it's a new growth engine for the telcos. Particularly that of the fixed telcos. TM in particular, they've actually invested to upgrade their data center capacity in 2025. So they've managed to double this to about 40 megawatts now in terms of their twin core data centers. So that's one in Cyberjaya called Klang Valley Data Center, and there's another in Iskandar Putri called IPDC. So both sites have been upgraded. They've doubled up the capacity to about 40 megawatts. AIMS, which is the DC unit of Time.com, they've also been quite busy trying to expand the capacity over the last 18 months. Block 3 of the Cyberjaya campus is now up and running. So total IT load is now 40 megawatts as well, so comparable there with TM. Both are basically edge sort of co-location facilities, so they should actually attract quite a fair bit of the new customers from the fringe of Klang Valley. So I think the upgrades are quite timely, allowing both to capitalize on stronger co-location demands in terms of DCs. EDOTCO monetization, this is something that's been reported in the press. I think the 3 consortiums have been shortlisted according to reports. There's a Macquarie consortium, there's also an EPF Corp consortium, and there's also a Chinese player involved. So, it's pretty discreet, not coming from management, of course, but, it's a space that's worth watching. We think the monetization will basically result in a cleaner debt structure at the parent company level. I think one of the reasons why they're actually doing this, obviously, is to basically reduce overall group net debt position. Holdco level at Axiata, there's over 8 billion in debt. So if the proceeds are used to utilize this to pay off borrowings, the group level it will go under 1, which is basically in line with their intentions to actually bring this to about 1.5 times by end of this year. Third quarter, the level is about 2.5 times. So I think the monetization story is one key catalyst for Axiata as a whole. It will basically also improve the earnings outlook of the group. Jendela Phase 2, I think everyone's keenly waiting for this project awards. I think the window is over the next couple of weeks. We hope to be able to actually see some announcements there from the MCMC. If you recall, about 2,700 sites have been identified across Malaysia. I think most of this, at least 70% of this, will be in East Malaysia, Sabah, Sarawak. Location here is about 780 million. So the way this is done is that it will be funded via the USP fund that's administered by the telco regulator. The fund, will basically be used to expand some of these new areas in terms of the remote and the more rural areas. So telcos across the board will basically bid for some of these projects. It's on a tender basis. And I just want to point out that no telco-centric infrastructure players, people like Redtone, OCK, Reach 10 and all that will basically benefit. Reach 10 in particular has fairly good exposure in terms of both lots in terms of 4 and 5G exposure in Sabah and Sarawak. So overall there, I think if you look at the sector as a whole, nothing quite to shout about this year. I think last year was a year of the fixed line players as well. Both TM and Time.com did fairly well. TM was 25% up in terms of share price in 2025, 28% in terms of the Time.com share price. I think both have benefited from structural growth drivers and the positive dividend outlook. So that dividend expectations are continuing into this year, and TM and Time have said that they will be managing their balance sheet a lot better. Time has basically said that they've got a net cash balance sheet, so I think there's a lot more room in terms of special payouts, which is really, one of their key narrative as well. So overall, I think the view is still, very much neutral. Valuation-wise, I think if you look at the sector blended EV/EBITDA, it's still trading at a discount, -1.8, -1.8 SD from historical mean. And that's really the reflection of the extended 5G and DNB uncertainties. So, this is not really going to be going away anytime soon. So I think it's warranted for the fact that, we still have this, relative unsettled news in terms of DNB side of things. So preferred picks are still TM and a stock pick sort of call here in terms of Axiata for the monetization story. As I said, we're a little bit more bullish in terms of fixed players relative to MNOs. And if you really want to put your money into a mobile operator, with fairly resilient sort of dividends, the name here is Maxis. So Celcom DJ has disappointed quite a bit, obviously over the last couple of quarters due to the earnings weakness as well as the timeline as to them realizing some of the merger synergies, which will likely be backloaded to end of this year or even FY27. Okay, I'll stop here for now. I'll pass you on to Adam.
All right, thank you, Jeff. Just a very quick one on ISF's IPO note. So ISF will be is planning to raise up to 61 million ringgit, mainly for working capital via the ACE market. And ISF is mainly involved in the provision of end-to-end piping services for end-user premises, like your residentials, industrial buildings, data centers, and even some office buildings. So one thing to bear in mind is that they are huge in Johor. About 60% of revenue in the 7 months of last year came from Johor, and interestingly, the revenue contribution coming from data centers has increased from 2024 to 2025, and there's no doubt that Johor is a key data center hub, and ISF should benefit from this on top of the JSSZ plus the property boom near the Bukit Jaga RTS station. Other plans after listing include, of course, having their own new facility in Johor, along with some northern and central region offices in order for them to accommodate clients outside of Johor. And in terms of order book, the order book is currently at about 120 million as of December. We expect them to secure around 140 million for FY26 and 160 million for FY27. So our earnings CAGR that we forecasted for them is a 3-year CAGR of 39%, backed by steady drop in management trends. So we derived a fair value of 41 cents, which is derived by pegging a target PE of 16 times to the FY27 EPS. So so that's it for ISF's IPO note for today. Thank you everyone for dialing in. We will see you tomorrow at the same time, same place at ISB Morning Kappa at 8. Thank you and have a great day.